Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone midday, which makes it 1100 UTC. A big shout out to everybody that's live on the stream with us today and to everybody that's going to be watching this on recording. So I wanted to do something a little bit different today and kind of give a little bit of a deeper dive into my reversal strategy, which is the key strategy I use across multiple time frames. So I'm going to go through that in detail. We'll obviously take a quick look at BTC as well. And I also want to discuss how I use things like the DXY, which is the dollar index, as well as ES for Confluence. So before we crack on with that, let's just have a very quick word with our partners and then we'll get on with the stream.
PrimeXBT is the most powerful trading platform offering immediate access to over 30 assets. Trade cryptocurrencies, Forex, commodities, stock indices, and much more, all from a single Bitcoin settled account. Visit the link below and start trading on PrimeXBT in minutes.
Hi everyone, thanks for stopping by for the live stream. Do let me know if there's any issues with the sound or with the visuals, and if not, we'll crack on with that. FP, hello. Basebo, H, everybody else is here today. Thank you very much for stopping by, really do appreciate it. So we've started here with our weekly chart. Now, I always like starting with a naked chart. I think it helps give you a little bit of perspective of where we are. And once again, for me, I don't like seeing too many levels on a chart. I like to play weekly ranges, highs and lows, daily, etc. But we always want to be aware of our high time frame levels as well, okay? So when we started to lose these levels around here, which we can see was a very key support, look at these long downside wicks. When we came under here, we can see we retested this. Then when we were looking for where price might stop, something back here from December 2017. So this was December 2017's high, okay? Now, when we draw this level in, and it's important, certain exchanges don't have the data that goes back far enough. So sometimes it's good to find yourself an index chart, all right, or one of the longer serving companies or brokerages so that you can get the data from far back. Because as we can see here for this line, it acted as resistance here, okay, before we broke through, but we never retested it. Now, price doesn't have to retest a level. However, if it does, for me, it gives it a lot more validity. It shows that the liquidity that was above here that's got taken when it comes back down, that buyers are in control, right? Obviously, in bull markets like this, you get these big parabolic moves that rarely retrace. However, price can often be retested. So once we look back here, we take the high, we run it forward, we can see what key support it's left down here. So it can really, really help. And I always recommend people to really, really zoom out on your charts, okay? Very similar thing as we were approaching these highs here. Obviously, we set this one first. We can see as we came back up into it, we ran the liquidity here and came all the way back down. Then when this became the naked high afterwards, then when we had that secondary move up, we can see how price struggled to get above, deviated, closed below, and then sold off. So in terms of high time frame levels, that's what we're looking at. Peter, hello, buddy. So from there, I'm going to zoom right in, okay? So actually, before I do that, something that I do always do on these levels, I'm very, very keen to check out for divergences. For that, I use the B Pro. I've also got my RSI. We can see here how helpful divergences can be, right? And that's when you've got a disagreement between the oscillator and price action. Often when price action is running hot, the oscillator starts to cool. That's what gives that divergence. And it can be a sign that weakness is starting to come in. Or in reverse, when we get a bullish divergence, it can be a sign that although price action is coming down, there's strength coming into the market. Now, with divergences, it's key to note that these are often, like this one, corrective moves, yeah, in an ongoing trend. So as we can see here, this one, we're in an uptrend, higher highs and higher lows. This picks the correction. And what this does is it can be really, really useful because it can allow you to get into trades, right? So when you're in a really big, you're starting to build up some momentum or you're getting into a parabolic move, if you look for the divergences, they can often be the pullbacks that allow you to get a good R to R risk reward trade to the upside. Or as in the instance here and down here, they actually catch the reversals. So What we want to do in those situations is say to ourselves, we want extra confluence. We don't just want to blindly jump into a trade when that happens. However, they are of importance. So if we put on an indicator like our RSI, for example, what I like to see on the RSI, and normally on lower time frames than this, but is if I'm looking for a reversal like here, and okay, we caught the divergence early. We can see here slightly weaker divergences here, but we're stacking them on the RSI. I like to see price up in overbought or down in oversold, yeah, and that gives you a little bit extra confidence that maybe there's going to be a little bit of momentum dropping off. And we can see here as we're setting lows, lower highs, and lower lows as we come down. As we drop under here, this line, let me just zoom in and show you this one here, all right, which is set at 70, and there's another one at 80. I like using 70 as the overbought, okay. And then down here, I'm using 30 as the oversold. Also have two levels above that, 80 and 20, which are more of your extremes, okay? But what we can see here on a weekly scale is when price came back under the overbought section here, that's when we really started to get the sell-off, all right? So for me, trading is all about telling a story, right? We're trying to get into the minds of institutions, of smart money, where they're trading, how they're trading. We want to be on the right side of that, but we also want our own edge. And one of those things that I use here is the B Pro. So I'm just going to pop that off for a second. And then I'm going to show you how I use weekly ranges. Sorin, hey bud, thank you very much for joining the stream. Good to have you here. So I like trading inside bar patterns. I like trading prior week's highs, prior week's lows. Okay. For me, it suits my eye to see price trading within ranges. That's a clear high, a clear low, and then a midline. So I'm going to show you what I mean by that. Now, for those of you that don't know, an inside bar pattern is this. You get a large candle here, followed by another candle that doesn't go past the prior candle's highs or lows. So it's inside the prior candle. Now, how we mark these up, we take the candle's high, always including the wick. We also take the candle's low, okay? Now, it's not an inside bar pattern until we get the close of the second candle to make sure it stays in the range. When that happens, this larger candle becomes the mother bar, this smaller candle becomes the inside bar. And I'll show you this first before moving on, just to show you how we can play this. Now, obviously, we would execute this on the lower time frames, but look how this has set a range. We've got our range high and we've got our range low. Now, what we're looking for with this particular pattern is like range trading. We're waiting to get to one of the extremities, the high or the low, wait for a deviation, price to come back in the range, and then we target the far side of the range. Same here, deviation above, comes back within, goes to the far side of the range. This deviation here came up, didn't quite close outside, but when it did, we can see we get that close outside of the range, and then we start having continuation. So we would want to be looking at this as a possible target now, the high of the mother bar. Where else stands out on a weekly chart, for me, is this wick down here. Because when price was having this impulse move to the downside, price dropped all the way to here, but something strong reversed it, okay? So that's what's known for me as capping the market, all right? So that's been capped there. So what we want to do is be aware of that as well. So we're going to draw that in, make that a little bit thinner, and we're going to say, okay, from that alone, we can see how we're starting to build our picture. Resume, hey buddy, thanks for joining the stream. Honored to have someone of your TA capabilities on here. I hope you enjoy it. So with this, I'm going to show you how we can also use the prior week's highs and the prior week's lows in the same way. Now I'm going to zoom right in for this. Now forgetting our inside bar pattern for a moment, right, and focusing purely on each week as we go, and I'll show you how we can do this on lower time frames as well. Now, if this is our week, and we'd be trading this week, so at the close of this week here, right, we've got that low and that high. Once again, we're just waiting for price to reach the extremities, watching for deviations. Then if price gets back within the range, the high probability trade is to the other side of the range. We can see that then happened again here. Price sold off. We got another deviation here. Price came in and sold up again. So all we're doing is we're effectively week by week we're moving these levels from one to the other, okay? Again, we see here our highs and lows, price goes up, deviates, closes back within and goes to the lows. So while we want to be aware of our high time frame levels, guys, it's also really, really important to understand a lot of traditional traders are looking at prior week highs and prior week lows. You can have a lot of bots that are traded in for them, a lot of algorithms as well. So now hopefully that's clear, and do ask me any questions if you've got any. Hey Jimmy, IMR, thank you very much. So if you've got any questions, pop them in the chat and I'll deal with them right away, or we'll come back to them towards the end. However, what I'm going to do at the moment is I'm just going to pop on my current setup, which is built exactly around what we've just discussed. We can see here this candle we had, that was that week's low and that week's high, all right? And that's what made our range. And that's what I just want to take a look at. We can also see, as I was speaking to you here, this is our weekly mother bar. All right, mother bar high, mother bar low. We've completed the inside bar, meaning that we've closed outside of that, which is why I've got rid of those levels. But we do have a monthly inside bar as well, which we can see there's the high, there's the low. And one area of key interest to me is this, all right, which is sat at 24,675 on this chart, call it 24,650. Now, as we said before, what can often happen with ranges, highs and lows, is you can come up, never works on that level. You can come up, deviate. If we then come back within, right, and close within, then we're looking for lower prices, all right? Now, ignore that in terms of how much time frame that might take. Might happen a lot quicker, but it's restricted by the fact we're on one of the higher time frames. But you get the idea. We're looking for a deviation out, a close back within, ideally a retest, and then a sell-off. And I'm going to show you how we can target those. But for now, we're going to focus on the current setup, because that, as we can see, is slightly before here. Now, I'm going to turn the inside bar off for a moment just to keep the chart nice and clean. And then we're going to zoom in. We're going to move to our daily scale. So what we're doing here, guys, is we're building a top-down approach, right? We're looking at what's going on in the higher time frames. For me, I like to start with the weekly. On traditional assets, I'll often start on the monthly or sometimes the 3-month as well. But with the fast nature of crypto, for me, the weekly normally is the highest time frame that I check on. Now, what we can see as we dive in here is this high and this low, which was set from the previous week. So this is tradable. This is tradable. As soon as we get the high to the low, everything after here is tradable. What do we get? Our deviation, sell off to the lows. Price didn't quite get to the far side of the range here. And that's good, right? Because what it tells us that there's strength here, right? Because let's never lose sight of market structure, guys. We've got our low, higher high. This is now a higher low. Low, high, higher low, higher high, higher low. The fact that this didn't have the strength or the bearish momentum to reach the bottom of that range tells us that there's probably a lot of upside momentum coming. All right. So then when we get up to here, we see we have this big close above, and then that takes us into this range here. Now, this isn't actually last week's high and low. It's from the week before that, right? So this is when the low was set. This is when the high was set as we took it on the weekly scale. So as soon as we got this deviation here, this is what led us to our long trades, which we took on ETH, because we were getting, one of the good things to watch is your BTC versus ETH. See which one is favoring the strength, because you'll probably get a more impulsive move from one over the other. And that was the case here on the ETH chart. And then this up here is what led us to take our Bitcoin shorts. All right. We see the deviation, price closing back within, we get the sell-off. As with any range play, we always want to be aware of the midline. Okay. And to set that midline, I take a Fibonacci. I take it from the high to the low. And with this Fibonacci, all I've got is I just set this up from standard fibs to a 0, a 0.75, a 1, a 0.25, and a 0.5. And that gives you a really nice range fib then, so you can target your midline, all right? Which we've currently got drawn in as represented by the dotted or dashed line here. So what else do we want to be aware of? We want to be aware of the candles themselves, right? Because candles and candle patterns can tell us a lot. once these have been printed, there's no grey area there. That's what happens. Is what has happened with price that day or that hour or that 4 hour. Once these candles have closed, they tell us a lot of information. Now, when you start looking at key reversal points, one of the things that I study greatly are what the candles look like. Okay. So, for example, at this one here, we've got an inside bar. Yeah, this is the mother bar. This is the inside bar. If we zoom in a little bit, I'll show you a neat little trick with these. Remember, they act as ranges, right? So if we're looking here, we're going down and we're saying, okay, this is our inside bar. And let's make this a little bit bigger. All right, and this is our inside, and this is our mother bar. So mother bar high, mother bar low. Zoom in even more so we can see the inside bar. Now remember our principles here, guys. So this is our inside bar candle. I'm just going to make that a little bit thinner. And that is there as well, right? Again, remember the principles. Price runs the highs, runs the lows. Once it's run the lows, it then comes out and runs the highs. This doesn't deviate, it breaks out, and then we target the mother bar higher. As we can see, we get a good strong candle close outside of it. We don't get the deviation back below, but what we have above, and this is why we need to be aware of our high time frame levels, right, is we've got that week's high and that week's low. That's the prior week to this one that we're trading. So when price breaks out here, we've immediately got a target. That means that on the lower time frames, once we hold this breakout, we can very easily say to ourselves, okay, well, maybe there's a scalp opportunity from here to here. Yeah? And that's what we want to look at. So we get our scalp opportunity, we've got our targets, and then we know that if this deviates here and we start to see a breakdown below, we're then targeting the lows of this range. So let me just clear this up. And I'll show you an example from current price action. But first, remembering our techniques that we were saying on the weekly, we want to make sure we're following consistently here on the daily as well. We want to check our B Pro for the deviations, for the divergences, sorry. So divergence, deviation, back in the range, great opportunity to sell off. Divergence, back in the range, sell off. Divergence, back in the range, and we've got this corrective move here. Now we're waiting to see what the reaction was at the midline. We've got a decent reaction here, and now we've simply got our targets of last week's high, which is actually the prior week, okay, which is the top of our range. If price comes up, breaks out of this, we get a retest, then we know we're targeting the mother bar highs. However, if price comes up, deviates, closes below, then first we would target the midline and then the lows. Okay, and we're going to look at what those trigger mechanisms are on the lower time frames. Okay, guys. So, quick question here from Master: 24,000 good to short, I guess. Well, for me, I think if you're talking about this, the top of the range here, around sort of 24,277, call it 24,250, then that's definitely a target. For me, the way that I trade, I'm looking for price to reach key levels, what I call the extremities, right? And that's range highs and range lows. I'm then waiting with two plans: a breakout plan, right? Price comes up here, breaks above, we start building that structure, right? Then we've got our breakout plan here. However, if price goes up, as we said, deviates, comes back below, then we get our breakdown plan there. Okay, so I don't like holding too much of a bias. I like having clear targets in mind, waiting for price to interact with those targets, and then from there we can make an assessment. But a very good observation, that kind of area there is exactly where we're looking for at the moment to see if price reverses. So the other thing that we want to look at here is our RSI. And again, as I was saying before, we've got the divergence here, which is akin to what we've got on the B Pro as well. Now, one of the things that we've got here on the RSI that makes it a little bit uncertain is we've got above this 50 line, which is bullish, right? So let me show you, this whole time here, the last time we were trading over the 50 line was back here in April. And that's after we've had this nice kind of relief move here. However, we do need to remember that this relief move was a little bit sneaky and did end up trapping a lot of people. Let me just pop the B Pro off a second. Because we had these highs here, right, which were kind of akin to these lows back here. There's our SR level. We can see support, 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 lost it, resistance, resistance, resistance. Then this was a very, very sneaky deviation, right? Because price came out here, we're setting higher highs, higher lows. Everybody's looking at this level. Then when it breaks above, which it hasn't managed to do since all the way back in January, it got a lot of people long before it then started to break down. Something I'm always looking at here, guys, like I said about the RSI, is if we're pushing up to these levels, right, we're looking for deviations. And we might get the breakout play. You know, price could absolutely, at this point, come up here. We got the retest, right? The breakout. For me, this is where I'm interested in that kind of breakout play. Yeah. And again, ideally with a retest of this before moving up, because quite often with these deviations, you get these breakouts, price comes back. If you enter too early, then you can fall foul. These can just be liquidity runs, right? Because what you've got above this high, think about it like this. Think about how institutions are thinking. All right. As we go above these highs, this is where people have got their stop losses, right? So people that were short here, 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 where are their stop losses? Well, they're all above here, right? So if you want to start taking some liquidity, as in filling orders, well, you need to create buy orders to fill your sell orders, right? So think of it like this. Every time, if you open a short position here, your stop loss is just a buy order, right? The same way as if you open a long position here and put your stop loss here, that stop loss becomes a sell order. That's why quite often we see these key highs and lows getting run, yeah? Let's take this one, for example, you know? You've got that. You've got these, right? All untapped. There's liquidity down there. And that's telling us the fact that price isn't coming back to search for that is that we've got good, strong upside momentum. However, when we look at the opposite and you take this high or this high, when they get ran, then you tend to see your key reversals. All right, guys? So with the RSI, here we are again at that breakout, right? If we just checked our RSI and see that we're here in overbought, then we may have reconsidered any kind of entries here, right? Even if we weren't waiting for that structure break. However, that's not a golden ticket, right? Price can sit up here in overbought and it can even go up into extreme overbought. But again, once we look for our confluence and we're saying to ourselves, what story are we piecing together? We've got our divergence here. This could be a deviation. We're at a key level. We expect liquidity above it, so price could easily reverse. Then we've also got our RSI and overbought. For me, it tells a nice story that we want to just be a little bit cautious here. Okay. So, Blaze, good to see you, bud. Thanks for dropping on the stream. Right, we've got a quick question here. When trading weekly highs and lows and the price consolidates in the middle, when would we end the trade and when do we just wait? Do we simply take RSI? Okay, good question. And we'll look at that as we go down here onto the lower time frames. So, we've taken our assessment here on the daily. So now I like to drop down to the 4-hour chart. And what Blaze is asking here is, with range trading, how do we know? Because basically, with a range, similar to a support level, right? Deviation, price sells up, comes down here, sells off, closes below, then comes back above. Why? Exactly as we've just talked about, guys. Price is searching for liquidity, okay? So we've got these highs here. There's no surprise that we can see. Hopefully you can see that. I'll zoom in a bit more. See how this just gets run? Price comes down. What's it done here beautifully? Anybody that's gone long here with limit orders here, right, it's pushed it up, encouraged more longs into the game. Price gets forced down, taking out the stop losses that are down here, adding liquidity. It then comes back up to take the stop losses that are above here before it has an impulsive sell-off, all right? Price is very often hunting for liquidity, or always hunting for liquidity, right? That's why we get our deviations. Now, for me, the reason that I don't trade at midlines is because they can be very indecisive. As we can see here, you get a lot of choppy price action. If you were to put a volume profile on there, you'd probably find this kind of region is where you get your point of control. Now, when I'm managing a trade, first of all, my entries want to be here or here, right? So let me just highlight those. So we're looking for entries up here, yeah? And we're looking for entries down here. Remember, on our extremities, yeah, on the highs and the lows. When we've entered here, when price gets to our midline, what we're saying to ourselves is, okay, well, if price kind of holds here, then we're fine. If price starts to break down, yeah, we want to see that series of lower lows, lower highs, and then a break of that low. that's when we would start scaling out or considering closing down the position. What we can see here is we got our close here. Yeah. Let me just do that with a line so it's a bit neater. So we got our close below. However, close below here, as price then shot up, the minute that we've closed below here, that's our sign to get out of dodge. Now, I'll show you this on the lower time frames as well. I'm always taking profit off of these trades. Okay, so as we're starting to move higher. So for me, Emblaze, if we look at this on this level or on a slightly lower time frame, I'd be waiting for the close below the midline and then for price to close below that low. That would then tell me that momentum is definitely to the downside and you can start scaling out the rest of your position. So I hope this all makes sense so far, guys. If you've got any questions, please do pop them in the chat. So the next part of it that I really wanted to kind of look at with you guys is what do we do when we get to these levels? Yeah. So what do we do when we get here? Now, as we pop on our RSI, you're very welcome, bud. Again, look at this. We've got our divergences on, right? Now, we get our divergences here that pull these little pullbacks, but that's fine because we're not targeting those. Remember, as we said, we're only interested here, and look what we get. Here, we get the deviation. Price closes back within. We've got our bullish divergence. Price is now back in the range, and we get our golden ticket, which is the fact that the RSI is down here in oversold and is now back and has now started a bullish momentum to the upside. So for me, if I was trading this just on a 4 hour, it gives you a beautiful entry here, right? We've got this bullish engulfing candle. We can enter at the close of that. Where's our stop loss? Well, where's the risk is under here. Yeah. Stop loss here, entry here, lovely trade to the upside. That's not how I trade personally. I like to go onto the lower time frames, but we can see it here. We can also see it here, right? Look, we get our entry, we get our deviation, price comes down, but we don't have our divergence. So we're patient. Price then breaks above, traps a lot of people here that are going long. Again, guys, remember about liquidity. Look at the prior highs. That's been run. Those people's stop losses that are there have been taken. Fuels and fills the sell orders because they've all become buy orders and price starts to cascade down. Even again, if we were trading this just on a 4 hour, we have got a break up above here. We've got our bearish engulfing candle now. We can take our entry there, stops above here, targeting the midline. All right. So, buddy, really good to see you. I can never pronounce your name properly. You're going to have to drop me a DM with how to do it. But let me try it again. Sikinyor? That is obviously a horrific pronunciation of that name, but I really missed having you on the streams, bud. Thank you very much for joining by. And Peace Sniper, thank you for the feedback, guys. Really, really pleasure to be here for you. All right. So really nice, simple strategy. Yeah. So we've got an out the box strategy here. We can take the divergences. Yeah. Or, right. And let's do this. This is something I like doing sometimes as well. I'm going to mark the candle after the divergence because it's important to remember that the divergence isn't set until that candle closes. So don't set it on the actual candle, set it on the one after. So let's take these two examples here. This is when these two arrows are when we've got our confirmed divergence. So we drop it onto the hourly and we say to ourselves, right, if we're now saying what we want to do here, right, first of all, we've got confluence from an hourly divergence here and an hourly divergence here. Perfect. So I'm going to pop the B Pro off now just to clean up the charts a little bit. So once again, RSI down in oversold. Yeah. So good momentum opportunities, the upside. RSI here heading down from overbought. Yeah. So once again, we can see the momentum is starting to shift on our side, and that's how we get our higher probability setups. So what can you do on this level? Let's start looking at the hourly. Maybe we're saying to ourselves, okay, we want to see a close back within the level. So if that's the case, if we start with this one, we can see price closes back within. Once we've closed within, we can then just look for one of our trigger candles. So for me, I like using engulfing candles, pin bars, and inside bars. Now, we've talked about the inside bar, using it as a range on the higher time frame. How do we execute an inside bar pattern if we're looking at it as a trigger? And I'll show you. So, and if you guys get a chance to check out his stuff, is definitely check out On Chain Labs. That guy is an absolute monster for how he uses these patterns. All right. So, and this is something that he taught me. Okay, so let's take a look at this. Here we go. So we've got our inside bar. I'm just going to mark this up quickly for you guys so we can see. Remember what makes it the inside bar? Mother bar, this candle's within the range of the prior candle, inside bar pattern. Now, the trick with trading this as a trigger is rather than waiting for the deviations like we would do as a range, we're waiting for our two consecutive bullish candles. If we were favoring a short trade here, we'd wait for two bearish candles. So, bullish candle one, let me zoom in a bit for you guys. Bullish candle two closes outside the range, entry here, stop loss under here. We've taken the liquidity, guys, so we can be confident in the move higher. All right. Now, let's look at that at this one here, remembering we've got our confluence, we've got our divergence, on the 4 hour, on the hourly, we've got our deviation here. We're saying we want to see price close back within the range. Lo and behold, what do we get? We get this powerful close back, this huge engulfing candle. Well, not quite an engulfing candle actually, but a seriously bearish candle. And then here, right? Here we get our bullish engulfing candle to the downside. Where's our first target? Our first target's the midline. So let's take a look at that, because to be honest, you got to be a little bit unlucky to get such a big candle drop back in, because you've taken out a lot, which means your stops have to be higher. But as we always say, guys, just make sure you're managing your risk. Yeah. So if our entry is the close of that engulfing candle, and that's where our stop loss is, we need this to be at least a 1R to make it worth a trade. What have we got? 1.65. No problem. The fact that we've got all that confluence, the fact that we've got the RSI downtrending from overbought, the fact that we've got divergence on the 4 hour, the 1 hour, and the fact that we know price action here is now confirming a divergence, we can take an entry targeting the lows down here. Fine, we don't get down there. Something I like to do is when a trade gets to 1R, which would have been here, I like to de-risk a little bit, take 20, 30% off the trade, okay? And then I want to move my stops to entry. That way, if we get a situation like this where price reverses before hitting target, you can decide if you want to trim a little bit extra off while this happens. I'll show you what I'd look for on the lower time frames, all right, in terms of managing that. But if you're a higher time frame, not a high time frame, these are still lower time frames, but relative. If you're not a micro time frame trader, then that for me is a good way to get in and out of these. So I hope that makes sense, guys. Couple of questions. DB Cuman, brilliant to see you, buddy. Haven't seen you knocking about for a while. So first time catching a live stream in a while. Homesick, awesome. Always watch the replays. Love your insights about it. Keep it up, Mr. Richard. Thank you, buddy. Thank you very much. It's lovely. And then Nelly Manson. What have we got here? Hi. Did you say on-chain labs? I absolutely did. So a couple of guys. I mean, you should check out all the traders. To be honest, it's a pleasure to work with such an amazing team of professionals. But in terms of on-chain labs knowledge of those type of patterns, he's really exceptional. And if you're looking for what I'm about to dive into on the lower time frames, you need to check out our boy Razun. Brilliant with these kind of things, sees the liquidity in a very similar way. And, the whole crew are amazing. Bird for your higher time frame stuff. Jay is just unbelievably sick. You want to see someone who really uses those divergences, then Jay is, the guy's next level. But all of them, Julian and Milky on the fundamental side and that, we've really, really, really got a good crew. But anyway, not to sit here and big those guys up. Let's just also take a very quick look at how we could play this on a lower time frame. So I like using the 5-minute time frame a lot, but I understand that's not necessarily the most ideal time frame for people. All right. So to show you what we can do here is if we're using this time frame or a 10-minute time frame, each of these candles, it looks like it goes quickly here, guys, but actually it really, really doesn't. You're welcome, Nelly Manson. Very welcome. So let's remember our market structure rules. So we get our breakdown. If we want to say to ourselves we're closing in the range, well, what else do we want to see? Well, how about a market structure breakdown? So here we got our high, low, lower high, break of this becomes the lower low. What if we take the bottom of that and treat that as a trigger? Say to ourselves, fine, okay, well, we can enter here. We could take, for example, we could wait for the pullback, take this inside bar breakdown, take the bearish engulfing candles that sit along here, right? But as we're looking along here, we could simply set that. When price runs away, set our limit order on here, stops just slightly above the key resistance. We don't want to get too cute on the lower time frames. You'll find if you often target a swing high that's quite close by, then you get something like this, right? And again, talking about liquidity, what happens? Liquidity's above here. People that have gone short have their orders nice and tight. They get taken, and then you have a big sell-off and price doesn't get a chance to get back in, okay? Or you can keep it really nice and simple, and you can say to yourself, just wait for that market structure shift. So once we've broken below this low, yeah, that's where we have our break in market structure. And if I zoom in for you, you'll notice that we get a load of really good opportunities to get into this trade. Yeah, so again, we've got our inside bar here, mother bar, 2 consecutive bearish candles. We would enter here. All right, we've got a load of different bearish engulfing candles that we could enter here as well. So that's one way to do it. And that's a nice way to monitor it on the lower time frames. Now, the other reason that I want to look at the lower time frames, okay, is as we were talking about trade management, as we start to come in here, yeah, into this midline, I like marking the previous key highs in this instance where we're starting to go down, all right? So if we've got this high here, right? When price starts to come up here, we don't need to panic and exit our positions because we're now broken market structure, right? High, higher low, higher high. We haven't taken out those highs yet, all right? So that keeps us in the trade. What do? We then move it down to the next one. Have we closed above that? No, we haven't, all right? So then that keeps us in the trade. Had we closed above this, we could get ourselves out there and take the rest of the profit. Now we've got this one, all right? Now, the reason that I do this is because when we're talking about liquidity, right, we're talking about price coming up, running these to fill the orders. Think of it like this, guys, okay? Institutions are placing huge orders, right? So when we want to place orders, we place the orders, right? And then we get filled because we're, a few hundred, 20, 50, 100, few thousand, 10,000, no problem, that amount of dollars. When you want to place tens or hundreds of millions sometimes of orders, then slippage becomes a really big problem, yeah? So institutions need to create liquidity. How do they do that? Well, they first of all want to take the stops that are up here. Remember, we were talking about that. So people that have gone short here and their stop losses are here, those stop losses are buy orders. If smart money wants to sell here, yeah, well, it needs the buy orders to fill the sell orders. So the buy orders that sit here, price gets put up into here, gobbles up that liquidity. Upon reversing, adds more liquidity because down here are the stop losses of anyone that went long on this breakout. So that's what we talk about when we're talking about the creation of liquidity, all right? And I'll cover that in detail on another stream. Again, as I say to everyone, if you've got anything of interest, please do just pop me a message or tag me in the chat and we can always cover it on another stream. All right, guys? So that's how you can manage trades on the lower time frames. And it's also how you can get entries, right? As we said about market structure entries, let's go back down here. Now this, if we remember, represents the high and low of the inside bar on the hourly. But in this instance, remember our 2 entries that we took above. We want price to close back within the range, high, higher, low, right? Then what would we say? The break of this high, what do? Place our limit orders here. So when price breaks out, it often retests this area, takes our orders, comes up. We have our stop losses under here, yeah, or super conservative under here. And then look what a lovely risk to reward trade you get, right? Even to the midline here, with our entry being triggered here. And with our entry being triggered here, and let's go with the more conservative stop losses, which is under here. Yeah, our first target's the midline, which is a 4-to-1 risk to reward. Our second target, which we also hit, is up here. That's a 8.7, almost a 9R. So for every dollar you risk, you get $9 in return. That's why I like to trade the extremities, right? Because if I'm wrong here, yeah, let's say I stay in that trade. Now I take profit on the way up. So let's say I get 6 or 7R out of that trade, right? Now, next time I enter a trade, let's say I'm wrong, yeah, and price takes out my stop loss here and I lose 1R. I've still got 6R in the bank. That allows me to be wrong 6 more times before I'm at break even. That's why we want to make sure we've got good upside and limit our risk, all right? So I hope that's clear, guys. The other way that we could have entered this, rather than waiting there for the pullback, we've got our clear high, higher low, break of this, means we're in a bullish market structure. So we can just wait for one of our patterns, Remember what they are, guys. We're looking for either a bullish engulfing candle, which is this one, gets you into the market right here, not bad at all, or we're looking for our inside bar breakout, in which case we've got our inside bar here, high and low of the mother bar. What are we waiting for? 2 consecutive bullish candles, right? And that's our entry there. Stops under here or under here. All right, guys? So I hope that makes sense. Peace, Sniper. Great explanation, very clear. Thank you very much. Lord Tang, good to see you, bud. Sorry, mate. This is totally my fault. I did say I was going to move the streams later this week, but because of the fact we're broadcasting across YouTube and Twitter and bits and pieces, we decided that we'd keep it at the same time and probably look to move it. Which, while I've got you all here on the stream with me, if there's times that really, really suit you, if you just drop me a message, put something in the chat. I want to make sure I've got 2 streams every week, Monday and a Wednesday. I'm going to probably put both of them out live in this fashion from now on. So if you've got any ideas for the streams, anything you want me to cover, please do just pop me a message. And also time zones as well, because I'll probably run them both in different time zones. So just to go back over a couple of questions. Manuel here. Hi, do you use Fibonacci pivots in any situation? Yes. So absolutely. I used to use Fibonacci's a lot. So if we take this example here, and let me pop this back on an hourly, I personally find that fibs work really, really well when we've established a trend. So let's say, for example, here, this is a great example. Now, we have here and we have our breakdown, right? We set our low, lower high, lower low. So we've broken market structure to the downside. Now, when we check our higher time frames here, we notice that we've got a lot of downside momentum. We also know that we're now targeting the lows of the range. So what gives us an opportunity to get in? Because we don't want to get in here, right? We don't want to get in here because price can easily reverse, take out our stops above there before doing exactly what we thought it was going to do. So if we want to stop ourselves getting tricked out, we take our Fibonacci from the high to the low. All right, guys? Now, let me change this. And this is a standard Fibonacci here, guys. So when you open the standard template, the only thing I've added in is this 0.66. These two, the 618 and the 0.66, are golden because these become the golden pocket. This is our target when we get a Fibonacci retracement. Now, as Manuel just rightly pointed out, these are a really, really effective tool. If we've got confidence that we've got that, often you get the impulse move, or not often, market structure just works like this, right? So in this instance, we've got an impulsive move to the downside. Then we get a corrective move on the way up, then another impulsive move down. Your Fibonacci's allow you to catch those corrective moves before the continuation of trend, all right? So when we put that on here, we can see that we've taken the high to the low. This is what you do when you're looking for a short side fib retracement, And for those of you that don't know, that can be found here on the left-hand side. Open that up and you're looking for Fibonacci retracement. The other thing you can do, which is quite cool, is if you put a star next to it, like with this, then it pops up on your toolbar here as well. So you can get really quick access to it. And if you want to turn that toolbar on and off, it's just this little star down here, all right? Just you can put your key things on there and it makes it a little bit easier and quicker to navigate. So Fibonacci pull back to here and down we go. Now, in trending environments, these are incredibly, incredibly potent, all right? So they're also very handy. A way that some people don't know really to use them is measuring the strength of a trend. So if we're here and this is our low and we're saying, okay, we take even on a micro scale, let's zoom right in here and look at this. So this initial move, we've taken this low to this high. We can see price only retraces to the 382. Now, that's showing a lot of strength, right? 382, 0.5 didn't come anywhere near the golden pocket. So that shows that we've got strength in the trend. If we move it up to the next one, we can see we get the retracement to our golden pocket before we have a really big impulse move to the upside. Now, if we measure the next one, we can see here that we barely make the 382. The strength of the trend is back in there. Now, what's interesting though, we then take that to the next high from this low, we can see prices now retracing to the 0.5. See how it's losing a bit of momentum. we then flick our indicators on and we can see the RSI downtrending quite aggressively here, it can show us that we're in for a little bit of trend exhaustion. All right, guys. So I hope that answers your question, Manuel. Apologies if it doesn't. But if you've got any more questions, mate, please do feel free to pop them in the chat. Rajesh, first time on your stream. This is extremely interesting. We'll practice these. Brilliant. Any questions, bud? Come and grab me. I'm available, obviously, through the nest. Come and grab me in one of the chats. Be happy to answer any. So, with that in mind, guys, and I'm mindful of the time of the stream as well, especially for people that have to catch up with this, make sure when you're looking at your charts, if you get your key time frames right, and you get your key levels in place, then once you target these extremities, all right, look, the last few weeks, we've had some excellent trades here, great trade opportunities here, great trade opportunities here. When we had this range here, we had a wonderful trade opportunity here, another long opportunity here. So when we're zooming out, right, something you can do that I find really, really interesting, if I just, let me just hide these and get rid of our current setup. Now, just with a naked chart here, there's an indicator that you can get. It's free, available on TradingView, called month/week breaks. Now, I go into the settings, I turn months off and just leave weeks on, So when I'm trading, normally I use these and also session breaks, which can be found down here. And what they do is they're splitting the chart into days for you. Now, I'm particularly interested in the weeks. I'll turn this off for the moment because it gets a bit messy. Because if you look back on this theory of prior week's highs and prior week's lows, just grab yourself your horizontal ray tool, Let's start with this week, for example. Now, that's this week's high. See, that's the high there. And the low of this week is down here, right? So all we're doing is we're just looking for interactions. What are we looking for? Our deviations, right? Deviation below, price gets back in, right? We don't get our trigger, but we wait patiently. Price gets back in, retest, higher high, right? Now when we drop down, obviously you don't have to execute on the 4 hour. We'd be looking to execute this on a lower time frame, but we have a big bullish engulfing candle that comes in, takes out those highs. We've got our inside bar pattern here, 1, 2 consecutive bullish candles, target the highs. What do we get? Deviation here, price closes back within. We've got our inside bar pattern here, bearish candle, there's our entry, there's your stops, trade it down to the lows. All right, guys? And all you can do is just move it week to week, Now, if we move it across to this week, we say to ourselves, right, that was the high of that week, that was the low of that week. What do we get up here? Here's our deviation, sell off below. Once again, high, low, deviation, sells high. All right, this is how a lot of traditional trading is done. So give that a go, guys. Take a look at the weeks, right? When you're struggling in any way for your support and resistance levels, or if you're struggling with your high time frame levels, take a look at those. And one other thing that I just like to close out by saying as well is that if you get a valid and good order block, so to give you an example here, and you would drill into lower timeframes to find one that didn't exceed this wick. But just as an example, we're looking for order blocks, right? They're key points of reversals when we're talking about reversal trading. Now, what we want to do is catch the ones that lead to a shift in market structure. So see, we've got our downtrend here. Then we break the downtrend with this move up, higher high, higher low. We want to know what caused that, where the liquidity is. So we want to know the last down candle before that move higher. Now, for purists, and what I would recommend is drilling into a time frame where you get a candle that then doesn't have another wick coming out the bottom of it, right? And you get a cleaner line. But just to show you very quickly how effective this is where we're targeting liquidity. We had a fast move away. Some people are trapped here with open orders, right? And often price will want to come and revisit these levels. So be aware of those. And the key ones, like I say, are the ones where you find a shift in market structure. Okay, guys. So look, I hope that's been really helpful. I'm going to be back again on Monday. I'm going to be back again on Wednesday. At the moment, I'm going to keep the Monday stream, I think, at 1100 UTC, take on board some of your requests, some of the timings and bits and pieces, and then look to move the Wednesday one a little bit later. But thank you so much, Manuel, LCP Sniper, Lord Tang, Rajesh, Nelly, absolutely everybody. DB Cuman, Sickniot, you really need to tell me how to pronounce your name properly because I feel awful every time. Nblaze, P Sniper, Master Killer, MR, Jimmy D, Razoon, thanks so much for joining, buddy. Sorin, Piotr, FP, everybody else that came on the stream today. I'm sorry if I missed any of you out, and everybody that's watching this on catch up. Managed to keep it just below an hour. I will try and keep the next ones a little bit quicker as well, but just wanted to give you a bit more of an introduction to me, my strategy, and how this works. But thanks very much for stopping by. If you do have any questions, come and grab me at the nest. It'd be a pleasure to work through them with you all. Have a fantastic day, and I look forward to catching you all around the nest.